but making some creations. Kevin Eastman is here. We'll tell you why coming up soon. The Federal Reserve will meet this month to consider hiking interest rates for the first time in years, and there's been an increase in speculation that the Fed may finally make the move and hike them. So what does all of this mean to the average consumer? With us today to discuss that is California Coast Credit Union Chief Financial Officer Christina Lethlean. So thanks for being with us.
My pleasure to be here.
So they have this meeting, apparently, the Federal Open Market Committee, September 20th and 21st, pretty soon. Why all the recent talk about what the Fed may or may not do regarding interest rates?
Well, you know, they actually meet pretty regularly throughout the year, and there's always keen interest in whether or not they're going to change rates. People are worried about that and concerned about that because they wonder how it impacts them if rates do move. There's a lot of pressure on them to move rates, but at the same time, there's not really good reason for them to change rates at this time.
What do you think the rates would change? I know it's all speculation at this point, whether they will or not, but and what would be the impact to the average consumer?
Well, if rates were to change at all, they would probably only move up by about 0.25%, or what's called 25 basis points. That's not a lot of movement. What that would do is impact short-term rates more than long-term rates. So, for example, a car loan is a relatively short term, so car loan rates might bump up a little bit more. And there might be some movement on mortgage rates upward, but that wouldn't be as much of an impact as it would be on shorter term loans like auto loans.
It is hard for consumers to really get a grasp of how will this affect me personally. So what are some tips for consumers who may be watching and wondering what should they do?
Well, if they want to take some action now, if they haven't yet refinanced their mortgage and they're still holding on to an older, higher interest rate mortgage and just haven't gotten around to doing that, I'd say it's time to jump on board and think about doing that refinance. If they're worried about savings rates might go up a little bit, but they're not as likely to be impacted by a small increase in the Fed raising rates. However, I would still tell people to stay the course. If they're saving money, continue saving money. If they want to find investments that will earn them more than traditional savings, talk to their financial advisor.
Okay, so take a deep breath and just wait.
Yeah.
So in your opinion, do you think it's likely or unlikely the Fed will raise interest rates?
In my opinion, it's still very unlikely. The purpose of raising interest rates from the Fed standpoint is more to help stave off inflation. And we still don't have inflationary pressures there, and we don't see signs of the economy overheating. While jobs are good, better than they have been in years, we still have an unemployment rate that's a little bit higher than what we like to see, especially when you factor in the real unemployment rate.
Okay, so just really quickly, how can people get more information?
If they want to get more information on how to plan for their own finances, they should go to calcoastcu.org and click on Know and Plan, and that'll help them plan their own finances.
All right. Thank you so much for being with us and
My
for this
pleasure.
good information.
Thank you.
And now we're going to see how it's looking outside today.